We are looking at Big Bear AI Holdings, Inc., ticker symbol BBAI, and right now the stock is trading at exactly $6.02, down 17 cents or 2.75% on the day. That red figure on your screen might look like a typical pullback, but do not scroll past it because the story happening under the hood of this defense-focused AI company is far more complex than a simple daily fluctuation. Most retail investors see a sub-$7 stock with AI in the name and immediately assume it should be behaving like Nvidia stock, ripping higher on pure sentiment, or they dismiss it entirely as a speculative gamble. The expectation here is that Big Bear AI should be exploding upward given the massive news cycle around artificial intelligence in the military sector. The reality, however, is much more nuanced and frankly more interesting for anyone willing to look closer. What we are seeing today at $6.02 is not a failure of the business model, but a market digestion period following significant volatility and major strategic shifts, specifically the massive news regarding the acquisition of Ask Sage. While the get-rich-quick crowd might be exiting their positions on Robinhood stock trading apps because the chart isn't going vertical today, the institutional money, the folks managing Fidelity mutual funds and utilizing sophisticated Fidelity wealth management strategies, are likely looking at this consolidation very differently. They aren't looking for a daily pop. They are looking at the integration of a $250 million acquisition that fundamentally changes how the U.S. government consumes generative AI. Let's break down this specific intraday movement. We are seeing volume that is slightly below the 30-day average, which suggests that this 2.75% drop isn't a mass exodus or a panic sell. It is a drift. When you see a stock drift lower on lighter volume, it often indicates a lack of immediate buyers at the open rather than a wall of sellers. This is a crucial distinction that you might miss if you are just glancing at a summary on SoFi Invest or checking your balance on Schwab Intelligent Portfolios. The market is waiting to see execution. We are in late 2025, and the company has just signaled it is ready to mature from a small-cap speculative play into a serious prime contractor. That transition is messy, it is expensive, and it scares away the momentum traders who just want quick flips. To understand why BBAI is sitting at $6.02 and not $10, we have to look at the friction between the narrative and the financials. The narrative is powerful. Big Bear AI is positioning itself as the Palantir of decision dominance, using AI to help the U.S. Army and commercial logistics partners see into the future. But the financial reality, as seen in the recent Q3 reports, showed a revenue decline of roughly 20% year over year. Now, before you close the tab, you need to understand why that revenue dropped. It wasn't because customers left. It was largely due to the cyclical winding down of certain Army programs and the lumpy nature of government contracting. If you use Interactive Brokers stock trading platforms, you can pull up the earnings transcripts and see that they actually beat EPS estimates, coming in at a loss of 3 cents per share versus the expected 5 cents. They are losing less money than Wall Street predicted, even while revenue dipped. That is operational discipline. This brings us to the Ask Sage acquisition. This is the elephant in the room and the likely reason for the current price action. Big Bear AI is spending nearly $250 million to buy Ask Sage, a platform that is already FedRAMP High ready and deployed across multiple defense agencies. This is a massive bet. For a company of Big Bear's size, this is an all-in move. Investors using investment help services or reading analyst notes on Fidelity investment portals might see this as a risk. Is the company biting off more than it can chew? That anxiety is what is pricing the stock at $6 today. The market hates uncertainty, and integrating a new acquisition is the definition of uncertainty. However, if you look at the synergy, Ask Sage brings immediate annual recurring revenue and a foothold in the generative AI space that Big Bear AI would have taken years to build organically. Now, I want to pause for a second and ask you something about your own portfolio. Comment below how many shares of Big Bear AI you currently hold, or if you are watching from the sidelines waiting for a specific entry price. It is always fascinating to see where the sentiment is among individual investors versus the institutional data we see. Moving back to the analysis, let's talk about the specific market mechanics we are seeing right now. If you're executing trades on Interactive Brokers trading systems, you might notice the bid-ask spread tightening around the $6 mark. This $6 level is acting as a psychological floor. We have tested this area multiple times this week. When a stock defends a level like this, despite a revenue miss headline, it often implies accumulation. The weak hands are selling because they see a red percentage on their Robinhood app, but the stronger hands, the ones who understand the GSA Oasis Plus contract award, are stepping in. The GSA Oasis Plus contract is a 10-year vehicle. 10 years. This allows Big Bear AI to bid on an unlimited number of task orders. It is a hunting license for federal billions. The market is currently ignoring this long-term value because it is obsessed with the short-term integration costs of Ask Sage. This disconnect is where the opportunity usually hides. When you look at Apple stock or Tesla stock, the entire world is analyzing every micro movement. The pricing is efficient. With a stock like BBAI, the pricing is often inefficient because the crowd doesn't fully grasp the government procurement cycle. Defense contracting is slow. It is boring. It doesn't give you the instant dopamine hit of a crypto rally on Robinhood crypto trading. But once a company like Big Bear AI gets embedded into a program like the Army's Global Force Management System, they are incredibly difficult to remove. That stickiness is what you are buying at $6.02. You aren't buying a lottery ticket, you are buying a piece of critical infrastructure that is currently being undervalued because of a messy quarterly report. Let's discuss the Vision AI aspect of their business, specifically the Pangiam acquisition from last year, which is now fully integrated. This is the technology that scans faces and bags at airports. With global geopolitical tensions rising in late 2025, the demand for secure, automated border control is skyrocketing. This is the commercial side of their business that balances out the lumpy government side. While the defense contracts are massive but slow, the commercial aviation contracts provide a steady stream of data and revenue. If you are engaging in self-investing and trying to build a balanced portfolio, you want companies that have this kind of dual-use technology. It protects you. If the defense budget gets cut, the commercial side sustains the company. If the commercial sector slows down, the defense side picks up the slack. The comparison to peers is also vital here. Look at Palantir. Palantir trades at a massive multiple because they have proven they can scale. Big Bear AI is effectively where Palantir was years ago: messy financials, great tech, and a confused investor base. If you are using SoFi Active Investing to screen for growth stocks, BBAI likely pops as high risk, high reward. The risk is real. They are burning cash, though their liquidity position has improved significantly with recent financing. But the reward potential is tied to that decision dominance concept. In a world of infinite data, the entity that can make the best decision the fastest wins. That is what Big Bear sells. They don't just sell software, they sell time and clarity. Now, we also need to address the institutional ownership changes we have seen recently. Reports indicate that major funds like Vanguard and BlackRock have maintained or slightly increased their positions. When you see Fidelity brokerage accounts and other major custodians holding steady during a 20% revenue dip, it tells you their analysts are looking at the 2026 backlog, not the 2025 dip. They are looking at the backlog of $376 million. That is nearly $400 million of work already secured. The stock is trading at a market cap that, while not cheap, is reasonable compared to that backlog and the growth potential of the Ask Sage deal. The technical setup on the chart is another layer to consider. We are currently sitting just above the 200-day moving average. For those of you who use technical analysis on your Interactive Brokers platform, you know that the 200-day is the line in the sand between a bull market and a bear market for a specific stock. Bouncing off this level, or consolidating just above it as we are doing today at $6.02, is constructive. If we were crashing through it on high volume, I would be singing a different tune. But we aren't. We are drifting. This drift is often the accumulation zone before the next leg up, assuming the company executes on its promises. Now let's shift gears to the future outlook and the expectation versus reality. The expectation is that Big Bear AI will continue to struggle with profitability, and the Ask Sage integration will be a headache. That is the bearish case. The reality, which could surprise the market, is that the defense sector is entering a super cycle of AI adoption. The Pentagon doesn't want to build its own AI, it wants to buy it. And it wants to buy it from trusted partners who have security clearances. Big Bear